My name's Ian Taylor. I'm the Chief Operating Officer of HT Digital. We're the world's largest crypto-only accounting firm. We're here today to talk about unlocking global adoption in this industry, and I'll start by running along my panel with Vera. Would you like to introduce yourself?
Awesome. Hello, everyone. My name is Vera Tzoneva. I'm COO at CoinTracker. We are crypto tax and accounting for both individuals and businesses. If you are a crypto investor, you would come to CoinTracker, add your wallets and exchanges. We calculate your tax liability, and then you're able to file it through a CPA or through a product like TurboTax. We also have products that serve businesses. So if you are a business that has crypto on your books, we can do your accounting and bookkeeping through our software. And we also have a product for exchanges and institutions to help them be able to issue 1099s and other government compliance requirements.
Thank you.
Hi, everybody. I'm Henson Orser. I'm founder and CEO of Soter Insure. We are a BMA licensed innovative insurance company that provides insurance product to financial institutions in the digital asset space. So like D&O, crime and specie, and slashing insurance. We denominate that insurance not only in fiat, but in Bitcoin and Ethereum as well. Prior to starting Soter, I was the first CEO of Vera, the virtual asset regulator out of Dubai, which we kicked up in 2023 during the regulation by enforcement era in the United States. And prior to that, I was president and acting CEO of Komainu, an institutional grade custodian that we spun out of Nomura, where I had been a senior executive prior to that.
Thank you, Henson. Michael.
Cool. Hi, everyone. My name is Michael Lau. I'm Senior Vice President at Bullish. Last week, we just completed our IPO.
Woohoo!
Exchange.
Congrats.
Thank you, thank you, thank you. And I also wear another hat. I'm the chairman of Consensus, the conferences that are under CoinDesk. Based in Hong Kong, first time in Wyoming. It's amazing here. So yeah, thank you so much for having us on the panel.
Thank you, Michael. Edward.
Hey everyone, I'm Edward, CEO of zerohash. We are an infrastructure provider providing infrastructure across both trading, tokenization and payments. We service groups including Interactive Brokers, Franklin Templeton, Stripe, Shift4, many, many others. And so we view this as a technology that can disrupt anything and everything. And that's kind of our journey since 2017.
Thank you, guys. So we know this industry has gone through many phases and cycles over its short life. Many standout events in the last 15 years or so that have given us sleepless nights, to say the least. Mt. Gox 2014, DAO hack in 2016. DeFi Summer was a positive event in 2020 and 21, and then we obviously had FTX and Terra Luna in 2022. We're in 2025, a new dawn, perhaps, for our industry. Is this the turning point for mass global adoption? Let's dig into that. Vera, if I may turn to you first. Let's start with probably the most common way to achieve global adoption and breaking down barriers to entry for certain market participants. To achieve exponential growth, one would assume we need some regulatory clarity, which is coming in many jurisdictions, which we'll get into shortly. We've heard from many of the other panels at this conference that the lack of regulatory clarity is a huge barrier to entry, especially for many folks. Knowing the good work you do at CoinTracker, can you share some of the data points and how you see this being addressed?
Oh yeah, absolutely. I mean, this is a common theme that we're hearing throughout this conference over and over. The call for regulatory clarity, some of the recent legislation that has passed that has enabled more adoption. Many people in this room have worked on some of that legislation or are benefiting from it, such as the Genius Act, the Clarity Act that's currently in Congress, et cetera. From our vantage point at CoinTracker, what we really care about is the tax legislation. And I'll give you some data points. Right now, about 25% of crypto investors are tax compliant, 25%. It's not like they're trying to evade taxes or do something wrong or illegal. It's just they're afraid to. They don't have peace of mind. They don't know how to. And from our user base, we see this over and over. People want to be compliant but aren't actually engaging in crypto because they're afraid of their tax liability. And how many times have you guys made decisions based on taxes? Don't answer that, but
move
probably
to this
a lot. Yeah, move to the state. So what we're trying to do at CoinTracker within our retail business is make this not an issue for you. Have complete peace of mind that at the end of the year when you come to CoinTracker, all of your crypto transactions will be accounted for and you'll be able to safely file with the IRS. And it's the exact same thing with the exchanges and brokers we work with. Recently, legislation passed that is now being enforced through regulations where brokers have to issue 1099 DAs. This is just an example of something that's happening in regulations that really matters. And so 1099s, many of you know, similar to the equities market, if you're on Charles Schwab or Fidelity, you get a form at the end of the year, it's a 1099. It tells the IRS that you owe taxes. That's happening in crypto for the first time this upcoming year, okay? So a lot of new people, that 25% compliance is gonna go to 100%. So people will need a solution, exchanges will need a solution. That's where CoinTracker comes in to make it very easy. And similarly with businesses, like there are certain gap rules, it's sometimes confusing, some of the rules are clear, some of them are not. So it really matters that the regulations are clear and that there are tools like ours where you say, this is very, very simple to understand, I don't actually have to worry about this. I can adopt crypto with peace of mind. And we see this over and over. I mean, again, I'm telling the tax angle, but we see this over and over. When there is clarity, when there are resources, the adoption grows.
And can I just follow up on that? Do you see the 75 that aren't compliant at the moment, do they know they need to be compliant with the regulatory perimeter that will force their business?
They certainly will starting January because they're going to get that form from their exchange, whether it's Kraken or Coinbase, they're going to get a form. And so they're going to say, how do I become compliant? And in some ways, it's kind of scary, but in many ways, it's actually really good. It gives them peace of mind, it's a source of truth, and then they're able to actually engage with greater confidence within crypto.
And it helps break down the barriers to be more compliant, which brings more capital in. Investors have a cleaner idea of the position of the organization. Great, thanks, Vera.
100%.
Let's now turn to Edward. And at zerohash, you work closely with banks, payment firms, and brokers, right? In discussions with your key stakeholders, can you give a sense of how highly regulated firms operating in the financial services space view this industry in terms of the barriers to come in, and how is this different in your experience in the last year or so?
Yeah, so zerohash, we've operated in the United States since 2017, and you know, Henson alluded to regulation by enforcement, which I think captures a lot of some of the challenges that this industry faced. But really, I think there's two other terms that we've coined. One is regulation by implication, and the other is regulation by rulemaking. So what we mean by regulation by implication is, you know, prior to the current administration, letters were sent by the Fed, OCC, and others to regulated entities, effectively stating if you move into the crypto or stablecoin space, your life will become very, very difficult and challenging. And Coinbase has done a fantastic job effectively following these letters. And so that effectively implied this implication that if you stepped into the space, you would have some challenges. Obviously, the Fed and OCC have now walked back that guidance. And you know, that's opened up the space for bank holding companies in particular. So my view is that effectively every GSIB, globally systemically important bank in the United States, now effectively can move forward with a crypto product given that guidance that was provided. The other piece is regulation by rulemaking. So not to make this a super dense accounting you know, panel, but Sub 121 really had a massive, massive impact. And this was overturned with Sub 122. So effectively what that did is if you were a brokerage firm, if you had to collateralize every dollar that was effectively on your balance sheet of crypto or your customers' crypto with dollars. So effectively you had to recognize customers' assets as effectively a liability, and then you had to have the dollars as an asset. And that made it effectively incredibly expensive. Your customers had $1 billion of crypto, you had to have $1 billion of cash. So you can imagine what that did. So maybe one tangible example, regulation by enforcement, regulation by implication, regulation by rulemaking. A great example of this is one of our clients, Interactive Brokers. Effectively now they went from launching, or having 4 assets at the end of last year, they now have about 15. The marketing budget on this has now gone from effectively 0 to a number greater than 0. Effectively now it's not costly. You don't get penalized for being successful in bringing crypto to your customers. And then, now in their earnings calls, they talk about crypto, right? They've spoken about their roadmap around launching staking with zerohash and other mechanisms. So the world is very, very different. And I think it's those three elements, those three areas that have shifted and very tangibly changed the conversation in the bank, brokerage, trading, advisory space.
Yeah, that accounting standard, SCV 121, that just was insane because it destroyed the custody model, which you don't hold capital as a custody service provider. That just seemed to me a very purposeful way to not allow certain participants to enter the space. Would you agree with that statement? Which has now been overturned, right?
And yeah, exactly. And the irony of this is that effectively, again, rather niche, but this is an audience that maybe likes niche, the government's own accountability office, the GAO, effectively said that it was an overreach by rulemaking. And both houses, both the House and the Senate actually overturned Sub 121, but it was vetoed by President Biden. And so it had a massive impact of dissuading any group that was either publicly traded or brokerage firm from doing anything in the space. And very quickly that was overturned in January, and that's had a massive impact if you look at, for example, again, regulation by implication, enforcement, et cetera. The SEC put out a guidance letter May 29th around staking that now allows our clients to actually launch a staking product. So yes, these pillars, I think regulation is absolutely critical and important, but a lot has already happened.
Yeah.
Yes, a lot has already happened and shifted, right? Effectively, every enforcement action around, what is a security has been dropped. That has allowed people to launch more assets. You look at, guidance in terms of which entities can enter the space, and then what they can do when they enter the space. And so it's a radically different world that we live in now.
I was really pleased to hear Paul Atkins, the new SEC chair, say yesterday, most crypto assets are not securities. Very good soundbite. But just a final question back to you, Edward. In regard, you mentioned IB interacts with brokers. Will you see other retail platforms that allow investors access into traditional securities? Do you think you'll start to see them roll out products that allow their customers to buy crypto assets?
Yeah, look, our thesis is very simple. It's been the same thesis that we've had for many years. I would say that it went on hiatus for maybe 2 or 3 years. But our belief is that every crypto company will launch a traditional brokerage banking product, and every bank brokerage product entity will offer crypto. The two are becoming increasingly indistinguishable. And so, yes, the short answer is yes. And like I said, I think every bank that has a private wealth arm will offer a crypto product to their customers. They have to. At this point, every retail brokerage will have to. It's public. Morgan Stanley, Charles Schwab, SoFi, and others have all alluded to this. And so, effectively, every customer in the United States will have access to crypto through an account they likely already have. And the same in Europe, the same in other jurisdictions as well.
Our sponsors, Kraken. I work at Kraken. This is a homage to a wonderful event that both Soter and Kraken have put on. They allow their customer base to trade on tokenized equity. So yes, it's interesting where people will go to buy their digital assets. All right, let's now turn to Henson, if we can. Having been the CEO and therefore instrumental in setting up the first of its kind bespoke crypto regulator, Vera, in the UAE, one assumes you know a thing or two about regulation. Talk to us about the challenges in regard setting that very difficult, balanced and proportionate framework that achieves, in many circumstances, a sort of polar opposites of protecting consumer risk, for example, but not stifling innovation or moving or forcing companies to move offshore. Tell us your experience with that, yeah.
So I think we've heard plenty of participants here use the phrase regulation by enforcement and genius and clarity. So hopefully that episode of the US being a hostile environment for crypto operators is over. And certainly there's always been tons of innovation in the US, and that will be welcomed and wholesome going forward. In the height of 2023, I actually sat on a panel with Premier Burt from Bermuda and talked about different international regulatory frameworks which were being stood up to welcome compliant operators who wanted regulatory framework and clarity. And I think it's important to be able to have different approaches to that, why it's important, and then why it's okay. So first off, if you think about beginning 2022, some of the exchanges that had grown like weeds from 2018, we saw when the tide went out what the dangers were for having large exchanges with millions of customers and billions of assets on their balance sheet being unregulated. Now, someone like a Coinbase, which was already publicly traded and under the scrutiny of being a publicly traded company, had a lot of these controls in place. But other places, if you looked at it, they weren't audited. They commingled their own balance sheet with client assets. There was fraud. There weren't investor disclosures. There wasn't qualified custody. The assets weren't bankruptcy remote in the event of the exchange going down. And when the tide went out, many investors found themselves being unsecured creditors of a bankrupt exchange when they thought that their deposits were safe. So not stifling innovation, you do need investor protections at the end of the day. So the approach we took in Dubai with Vera, and I say we, because it was already well in flight by the time I got there and helped launch the rule books and issue the first licenses and start supervising and enforcing, was instead of focusing on the taxonomy of whether something is a securities or a commodity, we called them all virtual assets. And we had mandatory compliance rule books for every single virtual asset service provider, which covered the bare basic sort of highest common denominator of what you want to accomplish if you want to have FATF compliance and anti-money laundering and know your customer and source of proceeds and mitigate systemic risk, bankruptcy remoteness, et cetera. And every virtual asset service provider has to abide by that. And then we had smaller separate rule books for the particular activities that they were doing, be that a broker-dealer or a custodian or an exchange or others. And what we endeavored was to sort of, as I said, had this highest common denominator so that if you maybe looked at other regulatory regimes and you called all the virtual assets securities, if you just called them that, you accomplished, say, what the SEC was trying to accomplish in the United States with an investor protection. So although we didn't call them securities or commodities, we felt we were getting to the same outcomes. And in fact, we looked at the equivalence of what we were accomplishing in the outcomes versus other regulatory frameworks and tried to find sort of a highest ground of what we were trying to accomplish. And so if you look, and you'll hear from Premier Burt in 2 sessions, I think, as to the Bermuda approach and one of the reasons why we set up an insurance company there. But if you look at what's being accomplished with the market structure bill here in the US, you have a way of classifying stuff either as securities or commodities, dual supervision by the SEC and the CFTC, and then a methodology for determining whether those tokens migrate between being securities or commodities. But at the end of the day, you get to the same outcome, which is a long-winded way of saying that if you have a global exchange and you want sort of this network state of investors to be able to benefit from being part of a global network that's borderless, you nevertheless need to have local regulatory capture so that you don't have weak regimes in other jurisdictions that are sort of tainting the walled garden of the network that you want to benefit from. And you can start with global exchanges thinking about that, but then if you get games with 1 billion users where there's exchange of value and maybe jumping value transactions in and out of the game, you want to make sure that you have all those same investor protections for people participating in these networks and not getting scammed or losing all their money. So that's why I think it's important.
Yeah, you talking about like a global set of standards. It seems right now pretty impossible to get there. You know, talking of your old regulator Vera, I'm based in the UK and the work I do in Europe, we see lots of companies moving to that region because of Vera. But the UK is moving at a different speed. Europe's moving at a different speed. We'll come on to Asia in a minute when we speak to Michael and how fast they've moved. But at the moment, it seems like these 2 speeds, 3 speeds, 4 speeds are causing confusion for firms that are regulated. Does anyone have a view on that? Is it achievable to get a global set of standards? Where does that come from?
I think it's important, and obviously some people are moving faster and slower than others. The US was way behind compared to Europe and the UK, and places like Dubai, Singapore, Hong Kong, Bermuda, far in front. But sort of as the dam breaks and you get momentum going, I think people will try to catch up. And then actually, if you think of like global sets of standards for like ISDA documentation and swaps, or it's been done in financial services before. And the good news is with like, don't mean to be like a cliche, but with AI and large language models, you can put everybody's framework in there, even in different languages, and say, what is the highest common denominator? Who's being too oppressive? Who's being too loose? And lift the bar so that, you know, you're affording everybody in the world the same set of protections and the benefits of being in a global network.
Yeah, well, my personal view is, and thank goodness that the US has done a U-turn on driving forward with standards, because the rest of the world will follow. Definitely in my jurisdiction, we look to the US as the biggest market, which will really increase the global pie for everyone. And now I think it's probably a good transition to come to you, Michael, as VP of newly listed Bullish. Well done for going public. Oh, we should see many more crypto firms in this cycle go public, I'm sure. And also chairman of one of the top crypto events companies. Sorry, Sol. Consensus does a very good job. But you have a great grasp of global adoption with a focus on Asia, as at present Hong Kong being your current base. Can you talk to some of the recent ways the region in Asia is moving forward to knock down many of these barriers we've been discussing?
Yeah, maybe just to kind of set the frame. We actually did a study, I think it was like late last year, where we tried to estimate what the adoption looked like across Asia. And what we discovered was in that report that the adoption rate was about 22% for Asia, nearly 3 times the world average, which I think is quite intuitive. I think most people know that there's been a lot of stuff happening over there. But to us, it was just putting a number out there to really understand how quickly things are moving. And I think what's happened is that over the last couple of years, you've seen, you know, to your point, like regulations move at different paces across the world. Again, we've been watching in fascination of like how quickly the US has made that U-turn and how great that's been for our industry. I think what's interesting is also that, you know, for the last, call it 8 months, most of the narrative and attention has been about what's happening here in the US. I think it's important not to lose sight that there is a lot happening in Asia as well. And what's interesting about Asia, I'd say, is just in terms of how regulatory clarity provides confidence in people to do business. I'd say that with Hong Kong, for example, back in October 2022, the government came out and made an official policy statement that Hong Kong is going to be a Web3 hub. And they've been directionally consistent the entire time. I think what's changed over the past couple of years is the pace, of which it was very, very slow at the very beginning, and a lot of people were like, is this just rhetoric, or is this something that actually has substance? I think by now people realize it is of substance. And what's interesting is that, you know, with what's happened, you know, last November here in the US, I think that what we found is it so happens that the pace has accelerated around the world in terms of, you know, moving forward with this industry, and that's certainly noticeable over in Hong Kong. And what we found, for example, is, for those of you who don't know, a couple months ago, there was a stablecoin bill that was passed in Hong Kong. It came into enforcement as of August the 1st. You know, people are moving over there. There's a lot of people that are going there because, again, if you think about it, you know, if you look at traditional markets like the equities market, you know, the story primarily is a US and Asia story around where capital is going. I think that you're starting to see a lot of that mirroring happening as well when it comes to the crypto capital flows too. And I think that that clarity has really helped to set up more people to enter into it over in Asia. And I think that study that we did was really, really cool to kind of look at what grassroots, you know, adoption looks like, et cetera. But it is very much setting up for that institutional adoption that is coming through, that we're seeing here, and also that we're very excited to see more of over in Asia as well.
Yeah, I did a study at my old firm into the number of adults that hold crypto in their portfolio. And across Europe, the average was lower than 20. But I went to Thailand to speak at an event, and it was 50% of people in that region and crypto. I think the US is quite similar. But okay, so we talked about the main barrier to entry being compliance, and we can get compliance through regulatory new regulation. But another barrier to adoption, I'm turning to you here, Michael and Edward, regarding infrastructure. Now, the infrastructure is relatively nascent if you're a traditional financial service provider of a bank. What infrastructure do you think we need to bring in 1 billion users on chain and to get to that sort of next tipping point? What's missing? Prime brokers? What are the pieces in the value chain? What do you think?
So maybe I'll start, and obviously we're an infrastructure business, so we're biased. But you know, I think there's multiple buckets, but versus pinpointing exactly, I'd maybe be more thematic. I think the key theme that we're focused on is usability, right? And there's a lot of momentum. If you think about tokenization or stablecoins or anything, there's going to be a massive proliferation of stablecoins in the United States, right? I don't think that's a novel statement, but I think there's going to be a massive proliferation of stablecoins on many more chains. And so if you think about the number of permutations that can create, it's many, 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 and it's actually now at the point of millions of permutations that can exist. So if I want to send you a stablecoin today, I have to ask you multiple questions. Which stablecoin do you want? And what chain do you want it on, right? And so this importance around usability and interoperability is absolutely critical, because the Genius Bill, for sure, is going to increase distribution, which is incredible, but it's going to increase fragmentation. And you're already starting to see this in the tokenization of the equities world, that we're seeing massive fragmentation in terms of the number of issuers, right? So you can see the same Coinbase stock now in many, many different ways and on many, many different chains. And so you've created a very fragmented market. And so the key pillars for us in terms of actually using this stuff, right, is interoperability and usability. And as a user, for stablecoins, for example, I should not have to be asking those sorts of questions. I should not have to be copying alphanumeric addresses, right? And so really for us, what really drives us is solving those two pillars. And that's how I think that you get this from being a technical question to actually a value proposition. And that's absolutely critical, right? And those are some examples. And I think we're still very, very early, right? The number of stablecoins that have some meaningful size, I think there'll be dozens. And then the number of chains, right? The thing in vogue now is launch your own chain, right? And there's going to be many, many more companies that launch their own chains as well. So the complexity of the space is accelerating, and that will constrain its growth if you don't solve those two critical pieces of the puzzle.
Cool. Yeah, and ultimately, go ahead.
If I can just add to that, I think there's two things that really would help push it. One is that connectivity between fiat on and off ramping, right? Between kind of like fiat dollars as well as crypto is still a pretty big and friction-full element of the infrastructure. And I think there's, you're starting to see, for example, at least over in Asia, where you have those rails and they are regulated and people find them safe, you find more connectivity between the capital worlds of, traditional fiat as well as the crypto world. The second part of it is capital efficiency is still quite a big problem here. A large portion of the people that we speak to are institutions, and people in the institutional space are always thinking about capital efficiency. And so the greater amount of efficiency that we can bring into the system, whether that's through liquidity or credit or whatever it is that, for example, you mentioned prime brokers, having that in place will allow for people to put their capital to work more and then also help to increase the amount of capital that's deployed in this space.
And I would add, we're at a pretty interesting dynamic right now in the market where a lot of people have seen some regulatory clarity come to play, and they're interested. A lot of customers, individuals, businesses are interested. But there's a delicate dance because their interest also comes with well, how ready is the infrastructure? How clear are the guidelines? What tools can I implement? And then we have people in this room who are quickly trying to solve those problems for them at the same time. And so it's a dance back and forth where together we can drive that mass adoption. But it's not like we're perfectly ready, and it's not like the audience is perfectly ready. So that dance has to continue up and up until we've solved the infrastructure and we've solved also some of the trepidation coming from the larger market.
If I had $1 for every time I spoke to a global bank that was scared of touching public infrastructure, launching financial products on chain, I could retire. So yeah, there's a lot of fear out there. But hopefully, yeah, with these things we've been talking about, that will change. Sorry, Henson, yeah, you wanted to...
Yeah, one thing I would just add, which we are sort of thinking about and working on, which is that if you, just taking the US, if you have deposits in a bank, you certainly don't think about doing credit work on that bank and who they're lending money to and whether they're going to go down because you have FDIC insurance, right? And similarly,
rely on S&P and Moody's like we did in the financial crisis
exactly.
with CDOs.
And if you have securities at a broker-dealer, you have SIPC insurance, and that's for up to a certain amount, just so that the small investors, your deposits are safe. So one of the things we think about and are working on is that if you have Bitcoin at some sort of centralized exchange, you should have some sort of BDIC, for example, of where up to 1, 2, or 3 Bitcoin, your deposits are safe, and you don't have to worry about the exchange going down because there's a mutualized insurance fund there.
Yeah.
And I think that's something that could sort of help
Insurance,
make
absolutely.
people feel comfortable.
Allows for new entrants and supports the growth of an ecosystem. All right, last few minutes, folks. Thank you for staying with us. We're going to do quick-fire, rapid questions to each of the panelists. I'll start here with Vera.
Good luck, Vera.
5 years, crystal ball time, 5 to 10 years, medium-term horizon. Where do you see the industry in terms of global adoption?
Maybe I'll compare it to the Olympic Games. And each of the games is...
In LA next time, yeah.
Yeah. Each of the sports are a blockchain. And so you want there to be some sort of rules, right? Not oppressive rules that prevent the game from happening, prevent people from building, prevent people from performing in their sport, but a set of rules that make them feel safe and comfortable to do so. I would hope that in 5 years, there's a set of fair, clear, but not oppressive regulations for people to be able to actually compete in their sport and build on top of these different chains. And then kind of similarly, I would hope that everyone worldwide is playing tennis, swimming, playing soccer, really just adopting crypto in their day-to-day life. So the entire world is actually engaging in cryptocurrency comfortably, and it's really making a significant change in their financial lives.
Thanks, Vera. Henson, same question.
A couple components. I think that it's going to be hard to not have global central banks and governments continue to debase their currencies. So I think hard assets will continue to outperform. Bitcoin is digital gold. Gold will do well. I think Bitcoin will outperform gold. That's I think that stable coins, especially US dollar, just from broad global adoption, will continue to facilitate global payments, cross-border payments, which there's a lot of friction on that, and you can see that that's proliferating. And then, of course, the tokenization of real-world assets, so that if you can have the title of your home in a token and participate in borrowing and lending protocols, or be able to sell it to someone without all those middlemen and intermediaries, I think that that'll be adopted as well.
Thank you. Michael?
Cool. 5 years ago, nobody talked about blockchain because nobody knew what it was. 5 years from now, I hope that nobody needs to talk about blockchain because it will be so ingrained in terms of what we're doing. So that's where I hope we're.
Great. And last but not least, Ed.
Yeah, I mean, I would echo that. I mean, I think we'll interface with this technology on a daily or weekly basis, but not think about it. And I think that's ultimately the point around abstracting this away to a point where the value proposition is there. It's not valuable because we talk about it or because it's cool or interesting. It's actually providing value. Yeah. And therefore, we do use it every single day. But again, the pillars of abstraction need to be there.
Yeah, just like the internet, we don't talk about that. We just use the applications built on top. All right, folks. Well, all that remains is to thank my wonderful panel. Thank you.